Hello and welcome to Business Incorporated live on Channels Television. It's another trading day right here. Here's what's coming up in the next 55 minutes. Right here in Nigeria, markets brace for Nigeria's April inflation data. It's all about presidential visits now, as South Africa's Ramaphosa is set to meet Trump in the U.S. next week amid rising tensions. And the Bank of Uganda has bought $1.5 billion from the markets of the fiscal year to rebuild its foreign exchange reserves. It's good to have you join us. I'm Ladi Williams. Let's kick off with the markets now as they're moving fast. And yeah, the oil market, still that big drop we had earlier. We're still seeing weakness right there, $63.85 a barrel. As for Brent, 3.39% down, $60 for WTI crude, still managing to hold on to that level. We'll discuss further what's driving sentiment right there in the global oil markets. We've seen Nigeria's crude oil production output average 1.468 million barrels per day in the first quarter of 2025, which is much lower than the 2 million barrels per day target set by the government. This is contained in the latest monthly oil report released by the Organization of Petroleum Exporting Countries for April. And definitely, we've talked about that earlier. Lower production, lower prices, not so good there for a country like Nigeria. And talking about forecasts right now, the IEA, that's International Energy Agency, has projected that economic headwinds combined with record sales of electric vehicles will reduce global oil demand growth to 650,000 barrels per day, and that's for the later part of this year. In its May oil market report, the Paris-based energy watchdog said that at that rate, demand growth will have slowed from the 990,000 barrels per day the IEA measured in the first quarter of this year. However, the IEA lifted its average demand growth forecast for the whole of 2025 to 740,000 barrels per day, up by 20,000 barrels per day from the previous report, and sees global supply growth averaging slightly higher, 760,000 barrels per day in 2026. Meanwhile, the IEA says increased trade uncertainty is also expected to weigh on the world economy and, by extension, that's for oil demand. Let's get a check on the metals market now. See, gold prices were down to the lowest in more than a month. That's today, $3,178 per ounce there. That's for spot gold, 0.31% drop. Yep, this started the week weak, and that has continued now. U.S. gold futures 1.40%, $3,143. Silver not shining, not managing to shine there, $32.19, 0.77% down. Marginal drop, palladium, about 5 basis points, $953 per ounce. Then we have the lone gainer right there in the market. Platinum, that's up 0.21%, $983 per ounce. So that's weakness right there in the metals market, just that platinum there managing to hold up. All right, so other matters now. As part of efforts to promote safety, risk management and regulatory compliance in Nigeria's built environment, the National Insurance Commission says it's set to enforce compulsory insurance for public buildings and buildings under construction. This was disclosed during its fourth meeting of the Joint Committee on Insurance for Public Buildings and Buildings under Construction in Abuja. So definitely that's a new one that major stakeholders will be looking out for. Then stakeholders in Africa's food systems gathered earlier this month, which marked a significant milestone there in the advancement of organic and ecological agriculture in West Africa. Discussions focused on strategic collaboration, regional policy alignment, and scaling up ecological practices to ensure food security on the continent. Take a listen.
Well, this May, history was made as the West African Secretariat of Ecological Organic Agriculture convened its inaugural meeting of centers alongside the Regional Steering Committee of the Ecological Organic Agriculture Initiative to chart a sustainable future for West Africa's food systems.
But we must realize, we may realize that this meeting is very, very important to the achievement of the ECOWAS strategy. it is equally important to state that ECOWAS' willingness to continue to work with us is dependent on the outcome of what we have done. ECOWAS has its own strategy to backstop, to take what we have done. Most times reports are not enough, but confirmation of our report is equally important. So please feel free to indicate, and you'll be given an opportunity to address us.
Key outcomes of the event include formalization of WASOA's coordination framework for regional organic agriculture centers, adoption of a 5-year action plan to promote agroecology, climate resilience, and market access, amongst others.
We noticed that in our region, we have problem of climate change, we have problem of food insecurity, and it is you have also problem of youth employment. A lot of our youth leave the rural area to the cities, urban area, and some of them travel abroad looking for better income. But you know the potentiality of our agricultural area, and it's very good that we support this youth to be businessmen or businesswomen in agriculture sector.
The 2025 WASOA inaugural meeting marked a critical step towards sustainable agriculture in West Africa by fostering regional collaboration, policy alignment, and private sector engagement.
Right about now, we'll be continuing with the conversations on Business Incorporated, but for our DSTV viewers, you see it's day 3 at the Zamfara State government there, commissioning of the renovation and rehabilitation of Block C of the JB Yakubu Secretariat complex. Our DSTV viewers can watch that, but this goes on, Business Incorporated, and all our other platforms. All right, now to our first conversation. Yeah, so much happening in the oil market today, quite dramatic price movements, and we've seen global oil demand is slowing faster than expected, and electric vehicles are partly to blame. The International Energy Agency just slashed its 2025 oil demand forecast, citing economic pressures and surging EV sales. Meanwhile, Saudi Arabia is poised to flood the market with extra supply, just as a potential U.S.-Iran nuclear deal threatens to unleash even more crude to the market. Joining us now to discuss, we have Chinan Dekwal, is the Vice Chair, Africa Energy Council. He's joining me from the Abuja studio for the first time. Great to have you, Chinan.
Ladi, it's a pleasure to be here. You got a really spectacular studio. Thanks for inviting me in.
Oh, thank you so much. And definitely it would have been nice if you were here in Lagos, but it's also great, that you're there in Abuja. So a lot playing out. We see the IEA warning of slowing oil demand. Our EVs, electric vehicles, and they've blamed electric vehicles and economic uncertainty as the main drivers. Is that all it is, or are there other factors at play here?
Ladi, it's a very interesting one. So just for context, you're talking about the IEA, International Energy Agency. The counterpart to that is OPEC, right? Organization of Petroleum Exporting Countries. Now, these two agencies have two diverging views. OPEC is incredibly bullish on demand, going forward. IEA, I don't want to say realistic, but certainly a lot more bearish. So they have tapered it quite a lot. So 100%, they are slashing down their 2025 forecast for oil demand growth, and 2026. OPEC has kept it constant. OPEC, the report came out yesterday, 1 p.m., Lagos time yesterday. OPEC kept it at 1.3 million barrels per day for this year, demand growth, that is. And for 2026, they kept it down, I think, slightly higher, 1.4 million barrels per day. All in all, the reality of it is, Ladi, the tariff game is slowing down global consumption, global demand. And we're seeing a massive destruction in demand. That's the reality. You just mentioned something quite important there on the supply side. We're seeing two massively important things happening. One, OPEC is going to put about 411,000 barrels per day in the month of June. So oversupply and lower demand. If a deal is struck with Iran, those barrels will end up coming onto the market again, which again will oversupply the market. And don't forget, the US are building a massive inventory of crude oil. So honestly, in a short space of time, expect to see oil, I would say in the next 3-4 months, expect to see oil around the $55. I'm talking about Brent now, Brent crude, around the $55 mark.
Right. And is 40 possible?
There's nothing that we can take off the table, if I'm quite frank, because supply is one thing. So I'm talking just on a pure play supply standpoint. We're talking about roughly maybe around $55 per barrel. I would say if demand craters any further from where we are today, I know there are positive signs with regards to the tariffs, but if demand goes any lower, frankly, I would not be surprised if we get to a situation where we're looking just above $40 per barrel. And don't forget, Laddie, I'm not saying anything controversial here. Even Donald Trump, this is exactly where he thinks is comfortable enough for the U.S. economy. He's looking to get prices of oil, a lot lower so he can boost demand, and taper inflation in the U.S. And that's sort of been the game plan all along. So it's very possible that we might see a situation, I would say $55, $60 per barrel in the next few months, very possible.
Right.
$40 a stretch.
Right. And even though we're seeing, consensus, right now that, we're going to see bearish sentiment, for the oil market, for most of this year, there's always that contrarian side of things. What do you think, flips the oil market bullish?
I think for the oil market to go bullish, there are a couple of things that would really need to pick up. I think the biggest jigsaw of the puzzle will be India. China is slowing down for a lot of reasons. Donald Trump has done that. I think the counterpart with everything that's moving into India, if India can really push forward from an economic standpoint, Apple has just moved into manufacturing in there, but not just that. Even from a pure play economic standpoint, if India is able to push manufacturing a lot and that gets into the global economy, we could have a respite in there where India starts to be a real player in terms of global oil demand. So demand would go up and you can soak up a lot of the supply that we're seeing. But I think, honestly, when I look at 2025, there are very few things that I see that would give us that upside right now. And if I just bring it back actually to Nigeria, Laddie, don't forget, our forecast for oil price for this year is, I apologize, for our budget is $75 per barrel. $75 per barrel, that's what our budget is based on. Yesterday, in fact today, this morning, we're talking about oil at $65 per barrel. So there's already a deficit there. So we need to start to put some realism around that. Nigeria needs to really give this a very close look. If there's a downside, what does that mean for executing this budget? Should we start to think about supplementary budget? Should we start to think about, some other ideas, I'd say?
No, definitely. I've also seen, conversations about how, countries that depend heavily on, oil revenue need to start preparing for even the worst case. Maybe the worst case scenario might be a $30 oil. Like, what more can you do, at this point, knowing that you've not really put attention on other, commodity exports. You've been solely focused on oil. What else can be done, right now, or they should be doing yesterday?
Yeah, and that's exactly the point, Laddie. So you make this really important point here. When we look at Nigeria and how we stand, 80% of our revenues, our foreign exchange, comes from, crude oil and crude oil sales, including natural gas and all of that. If we do not take the action right now, just given the risk of the downside, like I'm describing there, the risk that oil could actually go below $40 per barrel, this could have real consequences. I mean, last week we were talking about the debt that was just paid by Nigeria, which is really exciting. But the reality of it is all of that can be undone very, very quickly if we do not have a contingency plan. Now, just to put this out here for everyone to know, when you think about the cost of production, we in Nigeria have a very high cost of production. I mean, many numbers are put out there. On the average, I'll probably say $45, maybe $40 per barrel is our cost of production. So what that means basically is oil has to be at $40 per barrel for us to pay back all of the costs related to production. So $45 per barrel means we probably have a cushion of about $5 per barrel that we can play with, okay? So if we have such a high cost of production and oil goes to that level, we can very quickly, quite frankly, get into real financial trouble. I'd say Nigeria is very exposed, especially as our budget is based on $75 per barrel and volumes at 2 million. Don't forget that. The budget for 2025 The volume to balance that budget is $2 million, 2 million barrels per day. Today, we're only producing about 1.48. You know, that's the latest number that came out yesterday, 1.486 million barrels per day. But our budget is based on 2.06 million barrels per day of oil for us to balance the budget with a price of $75 per barrel.
Yeah, definitely a big shortfall there when it comes to production. But, you know, there might be some kind of silver lining, I'm hoping, you know, in all of this with, you know, oil prices going down, even though we know that's bad for revenue. What does that do for fuel prices in the country?
Ladi, pardon me. I can see you speaking. I think I've lost.
Yeah, can you hear me now?
I can hear you now.
Uh-huh.
I can hear you now, perfect. Yeah,
so
now I can hear you. Yeah.
I'm talking about some kind of silver lining, you know, in all of this. We know it's bad for revenue with oil prices going lower and projected to hit maybe $50 at some point or $55. But what does this mean for fuel prices in Nigeria?
Yeah, correct. So that's the silver lining. So there are actually quite a few silver linings. One, exactly your point, Laddie. Silver lining is because we're fully deregulated downstream right now. If the price of crude oil goes down significantly, that means that's good news for any refineries because you're procuring crude oil at a much lower price, and ultimately that should technically translate to the pump. So we should start to see the price of PMS, you know, coming down. If oil starts to hit $75, $55 per barrel, $50 per barrel, that should translate to our pocket. There should be a direct correlation with that. And I'm very happy to see Dangote, even last week, he slashed, you know, the price of crude oil. I know different dynamics, of course. But Laddie, a very exciting thing actually happened last week in Nigeria. For the very first time, we had Obodo crude blend that hit the market. That was the crude blend that came out of the corn oil production of OML 150. So exciting for several reasons. One, this is an additional blend to add to the 27 different blends that Nigeria already produces. You know, so for Cardos blend, we have Bonny Light, we have Kwaibo. This is an additional one there. So it diversifies Nigeria's offering onto the international market, which is very exciting. But even more exciting is the fact that this is done by an indigenous Nigerian player. An indigenous company is putting this huge milestone onto the market. It's very exciting. We're starting to see in Nigeria the transfer from, you know, things that used to be done by IOCs, international players, to these local players, and I think it's really, really exciting.
So I guess with the new Obodo blend, does that mean, you know, more production, you know, for us? Does that add to the production?
Absolutely. So, and that's exactly what we've just seen now in the crude oil you know, production for April. So, in March of this year, we were 1.4 million barrels per day. In April, we just came out yesterday, we were 1.486 million barrels per day. So the Obodo production has hit the market. I think more of that will come on as we go forward, without a doubt. But certainly, yes, that boosts our local production. But the important thing is it offers a new array of crude blends that investors can choose from. And don't forget, this is sweet crude. I think the API gravity of it is about 27.6. And sulfur content 0.05 or something like that. So very low sulfur, very good gravity, you know, really popular, you know, very good crude. Very similar to Bonny Light, actually.
Oh, fantastic. So I guess we're getting, you know, better and better with the grades of crude we have here. But we also have a development, the new leadership at the NNPCL, and definitely we know what was happening before now with the price wars between the Dangote refinery and the NNPCL. What are you seeing going forward?
Yeah, so this is a very interesting development. I think if you ask me, I mean, the last few, we've had this massive tension between NNPC and Dangote refinery, you know, as it were. But honestly, I think it doesn't need to be that way. These two juggernauts can play in this space and everybody can win. I'm very happy because the new leadership is certainly taking that approach. We see them pushing both agendas, and I think that's particularly powerful. But can I make this point as well? I'll just make this real point. Lately, we have seen in the news, you know, a lot of talk around, you know, looking at the past leadership, you know, a lot of focus on the past leadership and all of the things that have happened, probes here and there, which I think is really exciting for transparency. But can I make the point, you know, we have a very tall order here in Nigeria. 2.06 million barrels per day we need to hit by end of this month, by end of this year, okay? And an oil price that's going down. We need to focus on these really strategic goals as opposed to start looking back and going into a game of he said, she said, and, you know, probing here and there. I really think we need focus, because what we need, and Ladi, when you look at Nigeria's makeup, revenue makeup, a lot of the crude we're producing has been encumbered by a lot of the forward oil sales, okay? Forward crude oil sale that we've done before, the crude is not ours anymore. It's literally being taken by creditors. That's the reality. So we don't even have that, and revenue is dropping. We need to up production. We should not be distracted by any pros and all of that stuff. I honestly think it's a great thing to do because we need to establish those governance frameworks. But what's very important right now is to focus on those goals and make sure that we achieve 2 million barrels per day at the end of this year, and also make sure that drilling continues in the Niger Delta.
Right. I guess for Nigeria, it's drill, baby, drill at this point, or even more.
Absolutely.
Thank you so much,
Absolutely.
Chinan Dekwa, the Vice Chair, African Energy Council. Thank you so much for coming on today, and enjoy Abuja.
Thank you. Thanks very much, Ladi. Thanks for having me.
Nice. All right, now to our next conversation. From oil, let's move to real estate. You see, Nigeria's economy is quite tough right now with inflation high and the Naira quite volatile. And businesses are struggling, but smart investors are quietly making fortunes in one sector, or maybe not. Let's look at what's happening in the real estate sector now. And joining us to unpack all of this, we have Mr. Kunle Jinadu, who is the CEO of Good Tenants, joining me right here in the studio. Great to have you.
Very good. Thank you for having me.
Quite an interesting name for your company, Good Tenants. Who's a good tenant? At this point, is a good tenant the tenant that takes whatever rent the landlord is dishing out, or just keeps the property nice and tidy?
Thank you again for having me, Ladi. So let me talk about good tenants for a bit. We think first that homes and offices are supposed to be enablers of productivity and happiness for both tenants and landlords. So a tenant, for example, is paying rent because he wants to have a cover over himself and family, but then he also helps his social status. He wants to be able to get family together, and then even for his career. We've seen people rent apartments where they're able to do 2 jobs because there's power 24 hours, for example. So, and if you rent in the right place, you meet the right people. So there's a lot of reasons why people make decisions around renting. For the landlord, is thinking about income, obviously.
Right.
Rent, and then secondly is capital gains. Sadly, a lot of landlords in our part of the world think about rent and forget capital gains. So to answer your question, a good tenant doesn't just pay rent, of course pays a fair rent, but then keeps the property in great shape. Else, what happens is tenants live in an apartment for 5 years, they move out, and the landlord has to spend sometimes 30 times the caution deposit to fix the apartment. That's about 3 years of rent. And that's really bad business for landlords.
And I remember seeing on social media at some point, some ladies, getting the property they were staying in, they were actually, destroying all that they did, the property, and they claimed that, after they, fixed the landlord's apartment when it was really run down, the next thing, after fixing it, they're giving them quick notice that they have to leave, that they want to maybe sell the property or something. That's crazy.
Yes, there's always 2 different stories or 2 different sides to a story. And my experience, by the way, what we do is we provide tools for landlords and property managers to provide excellence to tenants. And so what we've seen dealing with both sides of this transaction is there's usually not clear agreements, first of all. So if you're going to renovate an apartment for a landlord, I think it makes sense for you to just negotiate and say, on paper, I'm going to be here for the next 3 years, because people will take advantage of you, whether you're a landlord or a tenant. So you have to have agreements that cover you.
I think one of the ladies said she didn't have an agreement.
Yeah, if you don't have an agreement, then does it cover you? But on the other hand, landlords also complain that tenants damage the property when they're moving out. So in the end, you're going to have good and bad people on both sides, and the right thing is for you to protect yourself.
And it seems, with all of this, as an investor, you're trying to make money on your investment. But it seems that rental space, in real estate, it seems it's quite risky, at this point, because you have a landlord that maybe renovates or builds newly, Somebody moves in, everybody's happy, you get your fee, this one gets the rent and all of that. But down the line, then it depends on how the tenant actually uses that property.
Yes.
You might have to spend so much, to put it back in the market. So what's the way to, help this situation? That's for the investment side of things, to make sure that, that property keeps giving.
Very, very important question. And, while we're a technology company, I spent 3 years just really managing properties for people and understanding. We wanted to build technology, but we wanted to understand the real challenges. And initially we said, let's help tenants find apartments because landlords are not, agents are bad, all of that. But then we started to talk to landlords.
Agents are another story.
We started to talk to landlords and just realized that landlords had a different story entirely. They were losing a lot of money. And every other day I speak to landlords. Sometimes I take time, for example, in December, I spoke to several landlords across the country, just asking them about their experience. And one of them told me, I don't think I'll ever get return on investment in my lifetime. That was really bad, coming from him. But it's because also we avoid doing things the right way. If you're going to rent out an apartment, that's a business. So just imagine, you had money, 100 million naira, and you're going to save it. You save it in a bank, right? You work with professionals. If you're renting an apartment and you choose to, make all the money and not pay professionals, then you're going to lose a lot of money. So what happens first is that you rent apartments, you don't do clear agreements, you get a caution deposit, which, in 5 years, inflation kills it. I mean, say it's useless in 5 years, right? And then there are no regular inspections, for example, right? But there's a challenge beyond that. Assuming a landlord does all the right things, the challenge is that there's no regulation. People will leave an apartment and go to the next one and do whatever they like, right? So part of what we are working on at Good Tenants, for example, is creating sort of like a bureau, similar to a credit bureau, where you know how people have behaved in their previous apartments. And that sort of creates a system to ensure that people behave the right way, when they're moving to new apartments. If there's it's just like having traffic lights, as we have in Lagos, without cameras. What happens is, that's what caution deposits are. What happens is people drive through, but then when there are cameras, if you notice anywhere there are cameras in Lagos, people stop.
Right.
Because they have to do the right thing, because there's a camera.
Yeah, it happens on 3rd Mainland a lot. I see people start slowing down.
Exactly.
Getting to
when they get
one of those huge
So security deposits are supposed to be that, but they are useless if there's no sort of like a bureau or control around it, and that's part of what we're building today.
So let's imagine I was a bad tenant,
yes,
and a couple of landlords report me, oh, this guy was horrible, he destroyed my house and all of that, and they put that on the platform. That means I get blacklisted. Nobody's going to give me a house.
Not necessarily.
Oh.
You have a right to dispute it, but it doesn't work that way actually. What happens is an independent person does the inspections both ways. So the landlord cannot report you, right? There's an independent analysis of the situation, and then it's put on the system. And then you can dispute it if you want and say, oh, I have, this was...
I wasn't that bad of a tenant.
It wasn't that bad, for example, yeah. So we are putting things in place, and we're working with a couple of real estate companies to make this public.
That would be quite interesting. But, going forward, what are you seeing? I know the whole shortlet scene, that one's been getting a lot of attention.
Yes.
Is it still hot, right now, or what's taking the shine in that market?
Just before I answer that, I think it's just important again to say that for landlords, your property is a business, so work with professionals, number one. Number two, the caution deposit system, right? It works if you really do it the right way. Just to say that.
Right.
Now back to your question about shortlets. Every time I travel, I'm almost always staying at Airbnb, right? For example, because I want to experience what it's like to be in a shortlet. And I think what we need to do to grow that space is grow our tourism sector in Nigeria. And I know the Lagos State government is doing a lot of work on that. There's a lot of, activities coming up. I know there's a FIAPC conference. I don't know if you've seen that yet in July, and in partnership with Lagos State government. So there's a lot of work that the current administration is doing.
So we don't have to wait for just dirty December.
No, because that's what happens actually. Dirty December, you get a lot of requests.
Right.
And then after that, it goes down. And so if you're investing for the whole year, you can't just get income only in December.
So you now become a seasonal...
Exactly. And the best places where you get a lot of return on investment on shortlets are actually places where there's a lot of tourist attractions. So, for example, Kenya, there's a lot of Airbnbs, and of course, other places in the West.
Right. Before I let you go, there's also this argument about properties in Lagos being overpriced, compared to, some other African countries.
Yeah.
And they feel like even the ones in maybe, say, for instance, Kenya, you see the properties are well built and, that's real luxury, compared to the one we have here in Lagos. How are you seeing that?
I'll think about this two ways. First is supply and demand, right? If there's more demand than supply, prices go up. You can't fight that. So what we need to figure out is more supply. I mean, that's on one hand. On the other hand, it's we talked about tenants damaging property, for example, and we say they're bad tenants, but there are also landlords who are trying to, make maybe a bit too much, and maybe not just landlords, even third parties, agents, maybe a bit too much. So I don't think that regulation will solve the problem, by the way. I know there's talk about regulation, but the same way that people are able to
price control.
Yeah.
Maybe price control, no?
I think it's capitalist markets, like, supply and demand. But what I think is the same way that we are able to potentially, check bad tenants, we can maybe create a system to check landlords that are overpricing, for example. And we've seen that happen in car hailing, where you can check the rider and you can check the driver, right? You can do that for rentals.
So it's a two-way street.
Yes, and they didn't have to bring government into that conversation. There was no regulation. It's just self-regulated within the community. And that's possible also in real estate.
All right. Thank you so much for helping us unpack all of this. Coolidge, is the CEO of Good Tenants, helping us see how we can make more ROI on those investments. Thank you for coming on today.
Thank you.
All right, we'll take a break now. When we come back, we're going to head straight to the markets. Do stay with us. This is Business Incorporated. All right, let's head straight to the markets now. Starting with the African continent, we're seeing red on the screen, but the NGX still looking good. 109,000 still held, but just by 46 points. Quite slim at this point, but could that flip by the end of trade today? Maybe. GSE All-Share Index, that's 91,776 points, down 0.75%. Other markets we track in North Africa for the EGX 30, we see that's marginally down by 0.02%. Then the Nairobi Stock Exchange for the previous close, that was up a big 1.96%, almost 2%. Quite a big jump there. All right, let's get a check on what's playing out with the markets here. Joining us to unpack this, we have Abiodun Adedotun, who's an equity trader, First Securities broker. It's great to have you on the show.
Oh, good to be here, Ladi.
Yeah, fantastic. I don't know if you have the inflation data yet. I know I don't have it. Do you have it? Is it out?
No.
No, it's not out.
No.
All right.
It.
Yeah, we're still all waiting for that. I guess maybe it might come at the close of trade today. But talk to me about your expectations and how you're seeing traders, trade around this inflation numbers coming.
Not so much is expected to differ from where it is, the current 24 levels. Of course, you've seen that things are a bit moderated, especially in food prices space. So you not really expect so much. And I don't think that gave room, right? I don't think, because the ultimate aim of these inflation numbers is what the decision of policymakers will be, or what the direction will be in terms of interest rates, and I don't think there should be more difference from what we are experiencing currently.
Right, so I guess, next week we'll definitely get the latest cost of borrowing. That's from the NPC. But are you seeing any change at all, or it's still going to be a hold?
I would still stick with a hold. Of course, it takes time for all these tightening to really get across the economy, and I believe that they will be watching closely. So I expect the decision to be data-driven, and I don't think anything should change at the next meeting.
Yeah, and we know the NPC members will be waiting for that data. That's talking about inflation, and I'm sure they're also going to be thinking about that the Naira and what's playing out in the FX market. But definitely, do you think investors, really care right now about, what's happening with the MPC?
Of course, it plays a lot in the investor's head. You understand? Interest rates continue to remain high, and investors would rather stick to the less risky asset and take a little bit of risk. Of course, you know that there is always a negative correlation between high interest rates and what you expect risky assets such as equities, to do. So I think investors will continue to play more in the fixed income space until
Yeah, we'll definitely be watching out for that. And so much, definitely that investors have to watch out for what's playing out in the geopolitical space. But Abiodun, I don't know if you can hear me. Hello, Abiodun. Okay, yeah, we'll try and get the... Okay, Abiodun, can you hear me now? Fantastic, but I was getting a little disruption there. I think there's a phone.
Ja, aber die machen sowieso erst die Marktübersicht an der Tafel.
I think there's a phone, vibrating, where you are. You can lift that up, at some point, so it doesn't disturb our flow here. But let's look at the sectors now. What are you seeing right now playing out in the market? What sectors are getting the focus of investors right now at intraday?
Yeah, the banks, of course, high interest rates, they're making still a kill, based on the decent interest margins. Banks will continue to thrive in this type of environment, even though it's difficult, for other where purchasing power is being significantly impacted. The banks, of course, they are still the leading this thing. We've seen a bit of, reversal in telcos, MTN specifically, you understand. They go back to profitability based on the Q1. We expect the trend to continue, and this is basically because of the tariff hike and, of course, more importantly, the stable exchange rate regime. But the jury is still out there on what how they intend to plug the hole currently in the balance sheet. In terms of the consumer goods, we've seen that also they've turned a corner, but the volumes you'd expect them to drive appears to have shrunk, and maybe going forward, right, they might be able to get some as purchasing power continues to increase, and as interest rate, FX rates continue to remain stable.
All right, what about consumer goods counter? We've been seeing some bullish sentiment there for a while now. What's driving sentiment there?
Of course, they've turned the corner basically. We've seen the big boys, the Nestle, the Nigerian breweries, you understand, they're posting decent numbers in terms of Q1. And we know what the narratives for 2024 was. FX was a big pain, and that problem appears to not be there as a Q1, and we don't expect it, you understand, to resurface. I think the government and central bank will continue to manage it effectively.
And talking about some specific stocks now, Beta Glass, that one has had quite a run so far. Why are investors so bullish on that stock?
Interesting. Beta Glass has always been a very, very stable company. Decent numbers over the year in, year out. But, investors are beginning to realize the value in this company. But one challenge there is that the float is very, very minimal. You don't get so much, you understand, to be able to trade. So with little volumes, you understand, it's basically the law of demand and supply. So everybody trying to rush into very, very limited supply, and that's what has driven it here. A month ago, 2 months ago, we are told me that it's going to be at...
Yeah, I'm sure most analysts didn't expect this kind of bullish run, maybe according to a day or two there. But I think you got frozen there again. It's having some network issues. But thank you so much. That was Abiodun Adedotunze, equity trader at Fresh Securities Brokers, bringing us up to speed on what's playing out with most of the markets, and mostly that's for the local bourse right here. All right, let's get a check on Middle Eastern markets now. We're seeing green on the screen there with the UAE, Dubai index 0.69% up, Abu Dhabi index, that's a marginal gain of 0.07%. Other markets we track there in Saudi Arabia and Qatar. We see the title there down. On the flip side, 0.55%. The Qatari index, that's down 0.18% at 10,574 points. And we take it over to the stock futures now. The dip today following a 3-day winning streak for the S&P 500, driven by optimism that the U.S. and China agreed to temporarily pause their tariff dispute there. But we're seeing there for the future 0.37% weakness all through there. The biggest drop, we see the tech-heavy NASDAQ at 21,250 points, down 0.66%. So we're seeing most of those gains, recoveries we saw in the market there being wiped up. But who knows, this might flip when trading fully starts. And for Asia now, we see Asia-Pacific markets mostly fell today, breaking ranks with Wall Street, and investors assess U.S.-China trade developments there. It was also green in Asia the past couple of days, but now 0.98% pullback for the Nikkei. Kospi down 0.73%, the Hang Seng Index down 0.79%. Let's get a check on other parts there. Just the Nifty 50 holding up there, 1.60% jump, 25,062 points there for the close in Asia. So it's not looking so good for most of the markets that we track in Asia. All right, about now, we'll take it on to Europe. Europe is next up now. We'll look at the markets there. Lars Holters with DW and joins me from Berlin. Great to have you, Lars. What are investors looking at today?
Yeah, nice talking to you again, Ladi. Well, traders here actually are not seeing that much action at all. The FTSE 100 in London is up just a fraction, about 0.1% right now, and that's even after a surprisingly strong report on economic growth in the first quarter, with the British GDP up 0.7%. And then you look at the CAC 40 down a fraction, as is the DAX in Frankfurt, also down a fraction. I don't think we need to read too much into this, however. We've seen a crazy rally over the past few days after that trade war crash, of course, before that. So a real roller coaster over the past 2 months or so. And currently, if you're looking at the DAX, for example, today's break comes near an all-time high. We did get some strong numbers out from Siemens, the industrial conglomerate, both revenue and profit there for the first quarter exceeding expectations. And looking at tariffs, a big topic that we talk about almost every day, Ladi. Siemens says they're not being hurt too much because the company manufactures a lot in the United States and doesn't depend that much on shipping goods internationally.
Meanwhile, in Germany, we see Chancellor Friedrich Merz has just begun his term, and one of his first speeches was on the economy. So what did you make of this speech?
Well, Adi, it was a good speech. It was covering a lot of ground. Now, when it comes to the sad state of the German economy, I did find it refreshing, actually, that Merz appeared very honest, not sugarcoating where we stand after a 3-year recession, or that latter part now maybe a stagnation. Well, and Merz says what probably not many people want to hear, but what they have to hear, that we can't get out of the doldrums if we don't work harder. Let me quote that chancellor here for a moment. Merz saying, with a 4-day work week and an improved work-life balance, we are not becoming more competitive on the global stage. And that is certainly true, and it goes to the core of the debate that we had in Germany for years now. Young people applying for jobs these days, they tend to ask how much time they have off rather than inquiring about the work itself. Now, I've personally heard that from HR people in companies that seek to hire. They tell me of a lack of working spirit. And, you know, while obviously families need time off too, and every worker deserves time off, it cannot be the #1 feature of a job. Merz said it like he sees it. We have to make some sacrifices, work hard, and then we get the German economy back on track.
All right, so was Chancellor Merz also talking about, details of his plans to, revive the economy?
Yes, Ladi, he did indeed talk about that too. It was quite detailed, I found. He talked about the current challenges that are affecting our key industries here in Germany, including the auto industry, chemicals, and machine building. He talked about strengthening future markets, including AI and biotech, including a stronger focus on research and development. He talked about improved opportunities for startups, and Merz talked about less regulation and bureaucracy, and he talked about some of the programs we have heard from before, including massive investments in infrastructure and in digitalization. He mentioned financial support for companies, investment boosters, and future tax breaks. Of course, now, this was a political speech, and Merz talked a big game. It sounds like he has a good plan and a competent team, but of course, we'll have to wait and see what the new administration actually delivers, because it's obvious that a lot needs to be reformed to improve things, and it starts with wages, specifically a higher minimum wage to boost spending. So that's something on the agenda. It goes on to accepting qualifications migrants have, but that have so far not been recognized in Germany, meaning that we have highly trained people here from abroad who learned their trade in their home countries and they can't work in these positions here. So lots of problems that we really have to tackle on a political level to help the economy. And after Merz's speech and a long-running Q&A with some of his department heads, it's clear that the new government has a lot of work to do.
Oh, yeah, so much work for the new government right there, Jen. But thank you so much, Lars Holter, for bringing us up to speed.
Thank you, Ladi.
All right, let's get some stories coming out of Africa now. See, modernizing existing rail networks, expanding into rural and underserved regions, and securing multilateral funding for regional projects and unlocking opportunities for local SMEs in the rail supply chain. These are just some of the key topics under discussion at the Africa Rail Conference in Johannesburg, South Africa. The event has drawn over 150 speakers, 5,000 attendees, and 500 guest buyers. Well, Channel's Africa business reporter Innocent Samosa has more.
The Rail Conference brings together rail industry leaders, government officials, and private sector players from across the continent. South Africa's Minister of Transport, Barbara Creecy, underscored the importance of public-private partnerships to tackle the issue of funding and investment. The minister says progress has been made in modernizing Africa's rail infrastructure over the past years.
When I look at the 12 themes that are going to be discussed during the course of this conference, I am convinced that this event is taking place at an opportune time for South Africa and the African continent as a whole. Rail transport is crucial for efficient and sustainable logistics, impacting both the movement of people and goods. It's particularly important for long-distance freight, potentially offering efficiency, cost-effectiveness, and of course environmental benefits.
Mahola Makololo, Business Development Executive, Aslon, says harmonization of rail standards across the continent can positively impact the Africa Continental Free Trade Area.
Corridor, we can talk about the Gautrain. Once you do have that level of certainty around political risk, financial risk, the certainty of recovering your investments, I think the investments do flow into the country.
As conversations beyond the Africa Rail Conference continues, the message is clear. Collaboration, investment, and standardization are key to unlocking the full potential of rail transport across the continent. From Johannesburg, South Africa, Innocent Samosa, Channels Television News.
Thank you, Innocent. Well, the Bank of Uganda has purchased $1.5 billion from the domestic market and deployed foreign exchange swaps as part of its strategy to bolster the country's foreign reserves. The move is aimed at enhancing external buffers and maintaining macroeconomic stability. According to the central bank, the accumulation was carried out over a period of time, with the FX swaps serving as a key tool to manage liquidity. All right, let's get a check on the commodities market. Now, we're focusing on cobalt. Now, we've seen the price there has lost about 50% from about $23,500 per ton. Let's get a check on why, what's happening with the price there with cobalt. Join us now is Tomiwa Ajewole, analyst, Financial Derivatives Company. Good to have you, Tomiwa.
Good morning, Ladi. Thank you for having me.
Yeah, so like every other commodity there, what's driving volatility with the price of cobalt?
Yeah, I think, first of all, it's important to note that Democratic Republic of Congo accounts for not less than 80% of total cobalt supply globally. So that makes them a key determinant of what happens in the cobalt market. And between 2023 to 2025, there was a huge increase in the supply from Congo in terms of cobalt. So that really dampened price. And, price came down about 50%. And, with lower prices, that's not good for the export earnings of Congo. So what happened was that in February 2025, they did a 4-month export ban on cobalt. So with that, the price skyrocketed back up 50% in the last 3 months. So we've seen a little bit of volatility in cobalt prices just due to the actions of Democratic Republic of Congo. So in 2025, it's expected that the price will remain relatively unchanged because right now there's a huge supply in cobalt and demand is coming down. Most cobalt is a key ingredient for batteries. And what's happening now is battery makers are making batteries with less of cobalt. They're moving towards this lithium iron phosphate. So there's a falling demand for cobalt while the supply is huge and is why prices are muted right now.
Right, and talking about green energy at this point, we know President Donald Trump is not really into that at this point. How do you see that impacting the demand for cobalt?
Yeah, so as I said, cobalt is mainly used for batteries, and batteries is key for electric vehicles, which is also in line with the green transition. But with the Trump administration, we've seen a lot of rollbacks for green policies. Tax credits are being rolled back, and also tariffs on minerals are also affecting the demand for electric vehicles in America because these tariffs actually increase, their projections and estimates that increase the price of EV cars as much as $15,000. So that is affecting the sales of EV vehicles in America. Well, the EV market is just more than America alone. There's still huge demand in Europe, there's huge demand in Asia, and the Trump administration is not going to be for life. So, the next US administration will be back to green transition. But in 2025, yes, EV demand in America is falling. That can affect the demand for cobalt. But in the global cobalt market, we're seeing sharp demand as EV demand is still on the rise.
And definitely, for countries that depend heavily on just one commodity, I know Nigeria has, some cobalt at this time. What are you seeing in our exports or plans for, exporting cobalt?
Yeah, so, according to the Minister of Minerals, Nigeria has about $700 billion worth of critical minerals on just our reserves. And, there are a lot of things that need to be done if we're going to go away from potential, our minerals potential to actualization. And, it starts with, getting rid of red tapes. We need licensing to be made easier. We need faster permits. We need more ease into the importation of the machineries that are needed to mine these minerals. And also, we can't do all of this without proper infrastructure. So it's still the same story we're saying. Without good power supply, without good electricity, we will not be able to take advantage of these potentials. And one last thing, because Nigeria has too many small businesses. So we need, we have several mining artisanals that are just doing small scale. We need proper training and a proper large establishment of large enterprises, coming together of all these small scale artisanals into a proper large enterprise with proper training, strategic partnership with international companies who have expertise in this sector. So with all of that, there's no reason why we cannot use these mineral sectors to boost the economy. And given the fact that it's in the manufacturing sector, extractive sector, it's going to do a lot for employment. So yeah, we'll be able to improve living standards in the country and grow the economy via the mineral sector.
All right, thank you so much, Tomiwa, for bringing us up to speed on what's playing out there with cobalt prices. Thank you so much.
Thank you for having me.
All right, let's get a quick check on what's playing on the crypto market. We're seeing red on the screen at this point with just a few pockets of green. So what's happening with the U.S. futures? I see that impacting the crypto markets as well. Let's get a quick check on the headlines now. We're seeing Pi Network. They've sent some shock waves to the market there. It crashed about a big 45 percent there. We know most of the people there that were mining most of these Pi coins. With the news released by the company there, it triggered widespread investor anxiety instead of enthusiasm. The fund financed through 10% of Pi's foundation token reserves was designed to accelerate real-world integration of Pi by extending its open network phase, allowing the blockchain to interact with external application and system. But investors didn't find that funny. We see Galaxy Digital, they've moved $103 million in Ethereum to Coinbase, and investors are wondering why they're moving that to exchange. When you move that kind of money to exchange, you might expect a sell-off, might be coming. So investors are bracing to see what happens next. Then we see XRP. It beats Bitcoin with a 5,840% liquidation imbalance there. When you're watching the longs and the shorts, the markets, as people that expect an asset class to go down or up. So there was quite an unexpected move there with XRP. Normally, Bitcoin has more of that, with big liquidations. But we see XRP not seen that happen for the longest time. So 5,840% liquidation imbalance for the XRP there. That's the longs against the shorts. So that's how major markets are looking today. Definitely tomorrow we'll get that TGIF trade. We'll see if the markets flip over to the green. Thank you so much for watching. I'm Vlade Williams. From me and the team right here at Channels HQ, it's bye for now.